We have still a economy in the U.S. which is not landing, right? It's chugging along.
Central bank's ability to finally control inflation is much less direct than might have been thought or hoped.
Inflation has peaked, inflation is coming down, but that's not really the story.
Financial policy tools have worked well in being able to calm markets, but there are risks that are out there.
There are certainly possibilities that further stress could be triggered at some point.
This is Bloomberg Surveillance, live from the IMF spring meetings in Washington, D.C., with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Live from the nation's capital for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio, alongside Tom Keene and Lisa Abramowicz. I'm Jonathan Ferro. The last day of our coverage at the IMF World Bank spring meetings right here in Washington, D.C. The attention shifts away from this room behind us to the bank earnings kicking off a little bit later on this morning. Stacked lineup for you, just a flavour of some of the guests coming up through the next several hours. It really begins with RBC's Gerard Cassidy. Looking forward to some of the coverage from him off the back of bank earnings. Then Valdis Dombrovskis coming up a little bit later of the European Commission. Mohamed Al-Arian around this desk with us. Looking forward to that conversation on the Federal Reserve and some of the gloomier forecasts coming out of the IMF. And on top of that, Eric Nielsen of UniCredit. Tom Keene, we have to start with the banks, though. Wells Fargo, Citi, JP Morgan, we've all been waiting for this moment. We've seen the data, payrolls and CPI. Now it's about the consequences of the banking shock of the last month.
I think they pull in right together, and I think the bankers will be watching the IMF meetings and the debris that comes out of these meetings. And this is something Jamie Dimon's talked about before, which is macro-prudential, the summation of risk. John Lipsky was really identified with this years ago. Summing up all the risk, and then what does it mean for your global banking business? And these are the kind of banks we're going to hear from in the next 48 hours.
Bloomberg Intelligence and others, Lisa, looking to JP Morgan as that port in the storm. Was it truly the port in the storm after the end of Q1 that we saw just weeks ago?
Okay, so I think that there are two groups of people who are watching this. They're the economists who are coming out and saying, how bad is the banking crisis? What do we have to worry about? And then there are the investors who are saying, can we start buying yet? Because they look really cheap and really good. And basically, you have those two poles, with JP Morgan probably not giving the answer because they are the big bank that are the port in the storm, and they are not going to be as susceptible to both the outflows as well as some of the stresses and some of the asset classes as, say, some of the smaller regional banks.
Maybe somebody in their shop will look at the BTMM Go screen today and whisper in their ears, it's not over. I'm sorry.
The deposit flight?
Where's the radio mic? I need a mic right here.
Well, look,
the whispering doesn't work.
It's not over.
Okay, but
it doesn't work like it does in the studio.
But honestly, it's not over. However, what you've priced into this market is a serious decline in profitability. And the question is it valid given how much cash they have and given how much really people still are demanding things?
This is a thing that's a third rail for me. The big banks are minting money, even when they have a serious decline in this, that, or the other. They don't want to tell this story of how much they're making and how much more they're making now versus 2019, or dare I say, John, even pre-pandemic.
Well, that's why the data on the deposits from some of the big players coming up a little bit later is going to be so fascinating.
Yes.
We got a number for Bank of America. In the midst of all of that stuff that was going on over the last several weeks, let's try and get a number for JP Morgan. I would say this, not my opinion, just look at the stock prices. Since SVB went under, the S&P 500 is up. Banks are trading really, really soft. And Lisa, to your point, I think that captures not just the crisis that we've seen in Q1, but also beyond that, the profit challenge that people are expecting further down the road from here.
So the delineation between the big banks minting money and the smaller banks perhaps more challenged on several sides.
Yes.
Do you see that divide get bigger? Do we get answers to that today? Or basically, will an all clear from JP Morgan, a better than expected projection, mean all clear for, some of the regional banks?
Just getting BlackRock across the screen right now. First quarter adjusted EPS, 793. The estimate, 767. First quarter net inflows, 110.32 billion. The estimate, 83.6 billion. Wow. The stock up just a little bit, Tom. Lisa, you go through the numbers. TK, the stock price up by 0.2 of 1%.
Do they have an inflation forecast in their earnings call today from
Larry Fink?
From Larry Fink.
You think the CEO might offer that, Lisa? What do you see?
Yeah, look, what I'm looking at right now is sort of interesting because you saw fixed income net inflows of $53.9 billion. The estimate was less than $53 billion. So even in fixed income, you saw that increase. Earnings per share, $7.93 versus the estimate of $7.67. So all around, pretty positive. My question is the mix of active versus passive. That has been really a big question for them. Passive is not very lucrative for them. And then also long-term inflows. This, to me, is the interesting thing. are asset managers coming back, particularly to fixed income, but also to stocks, of $102.7 billion versus an estimated $84 billion. That, you said earlier, just shocking in terms of the outperformance.
We got to get to our wonderful guest who's been dead on. But, John, all can suggest is there's, I believe, a debt workout of these failed and troubled banks. And I believe the name BlackRock is involved in that crisis.
Yeah.
To Lisa's point, is that lucrative?
Let's start the conversation this morning. We can do that with John Stolfus, the Chief Investment Strategist at Oppenheimer Asset Management. John, let's just start off with what you're expecting from JP Morgan, Citi, Wells Fargo a little bit later this morning.
Great. Well, we've got to say when it comes to JP Morgan, we're looking for the main thing there will be how many deposits have they gained? What's the cost of it? What's the provisions? And the same for Wells Fargo and with Citi. With the thought with Wells Fargo, their exposure in the mortgage market, very much a banker on Main Street, what that looks like. I think the real read here for strategists, investors, and traders today is to get the forward view from these banks relative to where they stand today in the aftermath of what we saw with those regionals and looking ahead.
John, you look like a genius. You've been participating in this bull market. You've extended out your timeline, and the timeline is now. When the bears capitulate, A, have they capitulated yet? And if so, when they do, what's it look like? What's it do to the market when the bears capitulate?
Well, I think, Tom, you're really putting me on the spot. But one thing we have noticed is the bears appear of late to be speaking out of both sides of their mouth. So telling us that they saw this rally would happen and predicting more trouble ahead. I think, there's never a time of uncertainty in the markets, but it looks now like we're certainly on the mend. The market is telling us very much that improvements remain to be confirmed, but they do appear to be on the horizon. The Fed has so far, since it pivoted, has been on the right track. And very fortunately, the consumer and business remain showing signs of resilience. And we think that's what's driving the market. It also, I think, is, trading is fear and greed. When it comes to intermediate to long-term investment, there's always an element of fear and greed that can come up there, but it's need, whether it's providing for retirement in the future, getting your name put on the side of a university, or for a building or whatever, but building assets. And we think that's what the market's reflecting now.
Yeah. Lisa, the Ferro building, it has a ring to it.
That works.
3 p.m. I got to go over to Ferro.
What would be inside it?
Absolutely
Italian
nothing.
street,
It would be really
Absolutely nothing.
No, you'd have fantastic, very well appointed furniture, very sparsely arranged, because I think of you as sort of a minimalist. Am I right?
So it's a furniture store.
All right, John, let's move on. I want to talk about banks, not necessarily furniture stores, although we can get there. I'm wondering, you've been optimistic. How optimistic are you to load the boat with bank stocks right now? The KBW index is down about 25% in just March alone. And it seems like investors are all looking and saying, can we buy, please, can we buy? Is this going to be the all clear sign?
Well, it does appear that there has been some kind of flow going back into those areas. Our view is, when it comes to our main exposure to financials, it's within the S&P 500, so it's the big banks, the best of the lot. Yet we have reduced our weighting on financials, the financial sector. We brought it down. My recollection is around 10.8 versus the 12.8, the benchmark weighting in financials, only because near-term volatility and opportunities elsewhere within the sectors that look better to be realized near term.
So what would make you, John, start to increase your allocation to bank stocks, not just the big ones, but also smaller ones?
I'd say just a little more distance into the future, moving into the future and beginning to see that there likely might not be more shoes to fall. We have to admit that both the comments over the course of the last few days from Jamie Dimon and from Warren Buffett related to the potential, not looking for any kind of disaster, but just more choppy water. Near term, we'd have to think, well, we'll stay where we are, about 200 basis points light against the benchmark rate for the financials. But looking to add again, because at the end of the day, the world runs on credit. And as we move towards this new normal with the end of free money, we think it's actually a healthier environment we're moving towards, where it will be less prone, it'll be more prone to looking at fundamentals rather than wild leverage plays.
That's the constructive view. John, great to catch up with you, sir. John Stelford's there of Oppenheimer Asset Management on this equity market on a day where we get a ton of bank earnings. We'll go through them all for you. Citi, Wells Fargo, JP Morgan possibly later this hour. Lisa, I'm looking forward to getting these numbers. I will say this, we've seen some signs of stabilisation. We have across several indicators, and I would also say you see that in the bond market as well. The 2-year, we've had these really, really wide ranges. This week, about 15 basis points, and 15 basis points on a 2-year compared to what we've seen over the last several weeks is nothing.
Exactly. So if there is a stability in rates that's giving people confidence that perhaps they can start to assess more accurately both the bank balance sheets as well as what an investment might be worth. We saw yesterday at 4:30 p.m. Eastern, the time when we get the balance sheet of the Federal Reserve, there was real stabilization there and actually a decrease in some of the term loans that banks have been taking out. So to your point, John, yes, it does seem like things have calmed down in a material way.
I would suggest they're going to kill themselves today to suggest how small they are. They're just, they're going to do everything they can to not show their dominance today in the conference
Good luck with
calls,
that.
plural. Well, but it's like at the IMF. Have you heard anyone at the IMF mention China? I'm waiting for the first IMF interview where someone says the word China. It's like we don't, there are these signalings of what's not said. Today, they're not going to say how dominant they are.
Well, the focus this morning is on financial stability, and correctly so, because we've got a ton of bank earnings. I will say this about the banking events of the year so far. Do you consider it an event, a one-off event, or the beginning of a process, the start of something? Because I think there's a lot of people that are drawing the conclusion from all of this and suggesting that this is the beginning of a process, that this is going to take time to come through. Then the next stop really is not the bank earnings today. The next stop really is the data we get from the Senior Loan Officer Opinion Survey, Lisa, and I imagine we'll get a flavour of that from the Federal Reserve when they meet May 3rd.
Which is probably the reason why people are going to be more focused on deposits than anything else, because the more they keep going out, the more lending will continue to be constrained.
Just need to get those little data points here and there on where this is all heading. Coming up next, a little bit later from the IMF, Lupin Rahman of PIMCO, Valdis Dombrovskis of the European Commission, Mohamed Al-Erin of Bloomberg Opinion, Eric Nielsen of UniCredit, and, I'm told, joining us shortly, Enda Curran, Bloomberg News, here in Washington, D.C.
Yeah,
over from Hong Kong. Very cool. We'll do that next. Equity futures down about 0.2%. Earnings from JP Morgan later this hour.
Keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. The U.S. government is struggling to explain how a 21-year-old man in a junior post was in a position to allegedly leak a massive trove of classified U.S. documents related to the Ukraine conflict. Jack Teixeira, a cyber specialist for the U.S. Air Force National Guard, was arrested in Massachusetts and is scheduled to be arraigned in U.S. District Court in Boston today. The New York Times reports he was the leader of a gaming chat group where the documents first appeared. In a testy public exchange with her Chinese counterpart today, Germany's foreign minister said Taiwan's destabilization would be a, quote, horror scenario, if any change in Taiwan's status would be unacceptable. Beijing has ramped up military drills around Taiwan in recent months. Meanwhile, China warned about the risk of falling debris near Taiwan this weekend following a planned satellite launch, denying Taipei's claims that a no-fly zone will be imposed to the north of the island. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
The world economy has proven remarkably resilient, but it is yet to overcome the combination of weak growth and sticky inflation. We project global growth to slow down to 2.8% in 2023.
The IMF paints a very gloomy picture for the global economy. Are you feeling gloomy yourself?
So I'm naturally optimistic and always believe in the ability to make progress. The bigger picture that I would argue for is even with the changes they have made in growth forecasts, they are still forecasting growth for the euro area and for the European Union.
That was the IMF managing director there, making comments about the outlook. Very gloomy stuff. And in response to that was the Eurogroup president, Pascal Donohoe. Now, this has been a clear theme of the week so far at the IMF World Bank spring meetings. The IMF has said one thing, gloomy stuff, and politicians around the world have pushed back. That was the Irish perspective on things. We've also seen that from Chancellor Hunt of the United Kingdom. We've also seen that from the Treasury Secretary, Janet Yellen, a little bit earlier this week as well. Lisa, there's a bit of tension there. The IMF saying one thing, and then repeatedly politicians around the world saying something else.
And politicians, I mean, I know that from the Treasury Department's perspective, for example, they think that perhaps the IMF was overly influenced by their conversations 3 weeks ago, and a lot of these communiques were written, which was at the height of the banking crisis. So they feel like it is colored to that perspective and not reflecting the strength that they're currently seeing in the data. That said, there is perhaps an over-dismissiveness by some of the politicians about ongoing concerns that people really have that will really be represented in today's earnings.
That's the diplomatic way of putting it, Lisa. A TK this week.
You're turning to me for the undiplomatic
I would like the undiplomatic view. Secretary Yellen this week talked about it repeatedly, pushing back against some of the communication coming from the International Monetary Fund.
What's so interesting here is they both have obviously very different mandates. But what's interesting is it's different mandates coming out of something we've never experienced, which is a natural disaster, the pandemic. And what I would suggest we've learned here, and we'll learn today at these meetings, is the pandemic's not over. The stream of the pandemic through here is bouncing around the political view and the economic view as well.
I don't think that was not diplomatic, so I'll give you the not diplomatic view, which is that people are basically saying, fine, it's okay to have an issue with the fact that this wasn't colored right, but it's another thing to say there's no evidence of credit crunch or credit crisis or credit withdrawals whatsoever after what happened with Silicon Valley Bank. Because, as Janet Yellen said, because pretty much everybody is saying they are seeing a contraction
doing
in
a Georgieva.
Yeah, it works really well on Bloomberg Radio, just banging a table, Tom. Keep it up, it's nice.
I think he will.
Right now, and this is a joy for Lisa Abramowicz, John Ferro, and myself, we speak to someone who, along with all of our team in Hong Kong, have lived COVID far more directly than we have. Enda Curran has held down the fort. I don't know, I think he goes to bed at least at 10 o'clock. He's on air till 10 o'clock, Hong Kong time. And he joins us now in his new duties in Washington as our global economics reporter. It is a wide mandate. Enda, thrilling to see you after 3-4 years of just a disaster. Let me start, before we get to your wonderful definitive article today on fragmentation and resilience, just simple, give us the Hong Kong update as you exited. What's the state of the city?
It's in a better space than it was. The airport has reopened, the border with Shenzhen has reopened, so mobility is much better than it was, and of course a lot of the restrictions on the ground have been lifted. But there's still something of a shadow hanging over Hong Kong. It hasn't recovered to being the finance hub that it was before the crisis, and I think it just has a way to go yet.
And as a reporter, how difficult was it to cover things from Hong Kong over the last several years?
It was difficult because Hong Kong was always a hub-and-spoke model. When you were there, you could travel right across the region and throughout China. That's what we always did. That was the model. And then suddenly we were told that nobody's going anywhere, and we couldn't go anywhere for 3 years. So it was difficult. We didn't have that mobility to get around, John.
First in, last out to the pandemic in China, reopening this year. That was the conversation at the start of the year. Supposedly, that was breathing some life into the more optimistic view for the global economy. We haven't heard much optimism around here at the IMF headquarters in Washington, D.C. Why is that?
There hasn't been much optimism. China is contributing to some of the better news here, though. So, for example, yesterday, Geeta Gopinath saying India and China will drive half of global growth this year. But there's no doubt the bigger picture is one of a long worry list. Some people talking about a Bear Stearns style moment. Back in 2008, after that episode, things were quiet. Everyone thought maybe the worst for the credit crunch is over. So some people here are warning maybe we're in that quiet period now. 6 months from now, all these higher interest rates will start to surface and cause pain for the global economy.
Are more people worried about the potential for a credit crunch here, or are more people worried about the potential for having to choose sides with respect to the polls around China and the polls around the U.S. and Europe, or possibly just the U.S. and Europe separately, and what that means politically?
Both, exactly. I think the US story is all about the credit crunch. Are banks going to pull back lending or not? That doesn't seem to be a global story. But this global idea of fragmentation and pulling the blocks has been a very strong theme here, and I've been surprised that it's been much stronger than I expected. So you've got this whole conversation going on about how Rich nations need to get their supply chains in order so they're ready for the next pandemic or the next conflict, whatever it is. But poor nations are saying, wait a minute, that fragmentation is going to be very bad for us. There's definitely a realigning going on in front of our eyes, actually.
Do we have a sense of where the IMF's priority is with respect to whether to acquiesce to some of China's demands and certain debt restructuring that is currently going on and that's kind of holding a number of pretty major developing economies hostage almost in this sort of limbo between defaulting or not? Do we have a sense of how hard of a line the IMF is willing to strike at fear of perhaps alienating China?
Very delicate dance going on that front this week. It's very important. Beijing made some comments overnight, by the way, making it clear that multilateral lenders need to be in the mix when it comes to any haircuts or shake-up of debt. The IMF seems to be holding the line that they're not going to be in the mix for haircuts. So as multilateral lenders take a different role, they are crisis lenders. China, of course, making the point that everyone needs to be in the mix for taking the haircut. So that's one of the key talking points.
In your wonderful article this morning, Gopinath, we don't have any Chinas anymore. To me, that's the heart of the matter. You know the run rates of GDP there. What kind of run rate is in your head for China forward? Is it a 3% gloom? Do they get back to the new normal 5-6%? Or frankly, can Chengdu do better?
I think people are saying 5% this year is possible, Tom, but the go-go years are definitely gone. Now, the optimists would say, wait a minute, it's slower growth on a much bigger base, a much bigger economic base than China was even 10 years ago. So there is that argument. But anybody looking to China for the go-go years of double-digit or high single-digit growth, that era is gone.
You mentioned the tension between wealthier nations and poorer nations over this race to subsidise domesticating supply chains, bringing everything home, so to speak. There's also some tension between rich nations, rich blocs, Europe, the United States. And it's Europe and the United States I think we need to focus on a little bit more. Adam Posen of the Peterson Institute joined us earlier this week, and he was warning about where this could ultimately head. Is that a concern that you share, Enda?
It's yet another one of the subplots going on here. Like you mentioned, you've got the rich world versus the poor world, and within rich, the rivalry. You know, the US Inflation Reduction Act is causing a lot of tension among key trading partners, especially among the Eurozone members here. They're talking about this race to the bottom in terms of subsidising and tax treatment. There absolutely is tension. It's a new era for industrial policy, even among the rich world, and that is a key issue for everyone here.
Have we given up on free trade and capitalism? Is that over?
I wouldn't say we've given up on it, but there's certainly some rethinking going on. And I would have to say, if you zoomed in here without knowing the background, you'd say this is a very different IMF meeting to say even 10 years ago.
Amazing. And wonderful to have you with us in Washington. Great to see you. Enda Curran there of Bloomberg. Tom, what a situation. I think it was Doug Redeker earlier this week who said there's no big theme this week. No big theme, just 10 different narratives that everyone's trying to push simultaneously.
Well, yeah, and I would say there's narratives based on many theories, and it goes back to the original. Some of this is absolutely original, and some of it, dare I say, is actually in the textbooks. But people are flying theoretically blind here. It's not just about the back and forth. It's about the foundational misunderstandings out there right now.
Enda is highlighting correctly, I think, the big risk at the moment. Just the idea that you have the banking shock we've had over the last month, Lisa. You don't see spillover immediately, so you start to sound the all clear. I think there's a real risk involved in that, not because I believe that this is going to get a whole lot worse from here. I'm not making a judgment on that. I just think it's too soon to make any judgment at all.
Well, and I think what's really highlighted here, and John Lipsky really was talking about this, is the lack of a unified response to a potential credit crisis. Back in 2008, everyone was really focused on trying to shore up the global financial system. Right now, whose rules are we playing by?
Yeah.
What are we going to go for here? Well, yeah, good luck with that. I mean, no offense, Switzerland, but I'm just wondering, you know, is that really the existential angst here? Are we all following the same rules, or are we all just in deep competition with one another?
It's a really big morning here in Washington, D.C. A lot of the attention, though, is going to be looking elsewhere. At least so far this morning, we'll be focused on the banks. We've already had BlackRock. We'll look ahead to JP Morgan, Wells Fargo and Citi. JP Morgan should come a little bit later on this hour. Going into all of that on the S&P 500, equity futures just a little bit softer, lighter, lower, down a little more than 0.1%. Live from the nation's capital, this is Bloomberg. Waiting for numbers from JP Morgan, Citi, Wells Fargo should get those numbers, those earnings for a messy first quarter for the financial industry. Those earnings dropping over the next 90 minutes or so. Going into that, your equity market shaping up as follows this morning. And good morning to you all just tuning in on TV and radio. Equity futures negative 0.2% on the S&P 500. On the Nasdaq down about 1/3%. In the bond market for once, a tight trading range. It's all relative, of course, but a trading range of about 15 basis points on the week on a 2-year. 395.80, your 2-year down a single basis point. But the standout for the price action of the week so far is in the FX market. Dollar weakness, euro strength. Earlier on today, euro dollar just short of 111, 110.76. The intraday high and also the year-to-date intraday high, and the highest level I think we've seen on this currency pair going all the way back to last spring. The dollar index now trading with a 100 handle. TK, the dollar index 100.88.
First thing I looked at this morning, John, we have not printed a 99 handle yet. We've come down into the 100 level. It's a persistency. Is it a grind? I'm not there. It's not technically a grind of weaker dollar, but it's certainly story driven, and you've just got to see what the news flow is to see if maybe we finally get this dollar breakdown many have looked for.
Taking out the levels we saw in early February, Tom. In early February, off the back of a really punchy ECB news conference with President Lagarde, and from here, that's where the debate is at the moment on the rate differential side of things. The Federal Reserve has signalled it's one hike away from finishing, at least that's in their projections, implied at least, and the ECB is basically communicating there's more work to do. I would say there has been a subtle shift, though, in the ECB officials that we've heard from so far this week. Just maybe softening the language a little bit, talking up 25 perhaps instead of 50, and then into the unknown.
I would suggest as we see the central bankers parade around here, and we do, Jerome Powell walking by our set yesterday, we got a big wave from him before he played in the band behind us. You know, Jerome and the dot plots, did you hear him?
I think it was Jay and the dot plot, yeah.
Yeah, well, that depends where they're playing. But, you know, Lagarde is not focused on that stuff. Lagarde is focused on Europe right now. I think she's less focused on the IMF chit-chat, and as you say, much more focused on the mystery of an absolutely original European experiment.
And I would say this, Lisa, for Lagarde and for other European officials, this isn't the Europe that they feared 12 months ago. This was a best-case scenario. To sit here
absolutely,
and hardly be talking about the European energy crisis. We've been here now, what, for most of this week?
They have a war.
You've talked about not mentioning China. How many times have you had a conversation about European energy through this week? Once?
Not even.
Not even?
Right.
Zero?
Yeah, I mean, basically, they've got a Hail Mary pass. Basically, you know, they got a warm winter. They had energy prices that were significantly lower than they expected, and China reopened earlier. I mean, this is both of them, and we saw from the Hermes results that Chinese consumers are very much buying, and they're buying in luxury. So here's the question. Is this truly a European strength story? I would argue it's not. I would argue that what we have seen over the past couple of sessions is very much a dollar weakness story, and it comes in the heels of the concerns that the credit crunch is going to disproportionately affect the U.S. economy in a way that the European economy will not feel, and that tech-heavy sectors aren't going to necessarily lead in the same kind of way in the U.S.
I'm going to rely on our FX experts, and I think they're going to look at rate differentials and just say, and to me, with Mr. Gentiloni yesterday, the former Italian prime minister, now holding court in the Europe, he was good on Juventus, by the way. But what was so important about what he said is I mentioned eurosclerosis, and I thought he was going to throw his coffee mug at me. And this is a sensitive issue for the Europeans. Is this a new Europe? Is a backstory here that's really not addressed?
Lisa mentioned Hermes year to date, up 36% year to date.
Yeah.
What a run some of those names have had, Bramo.
Did you see the year-over-year increase in profits? I mean, it's insane.
Phenomenal.
Double digits, incredible. I mean, it's not
Asia,
like
Europe, flying back over to Europe from China to do the spending again on luxury items.
Yeah, well, it's there.
It's back.
Let's go to someone who's very aware of that. While wearing Hermes this morning is Shonali Basak, and we're thrilled that she's with us this morning. Shonali, Wells Fargo, I want you to point this out for our international audience and for our domestic audience. And this is the idea that these banks are each different. What will be the signal from Wells Fargo that you will want to see?
The deposit number, of course, will be very interesting because we know that in this kind of crunch we've seen among the regional banking system, there has been a flight to quality. And so the JP Morgan deposit number will be interesting. This is a number, Tom, at JP Morgan that has been decreasing quarter over quarter for the last few quarters. The last time we saw an increase for JP Morgan was into the first quarter of 2022. So it's been a few quarters. For Wells Fargo, did they get the same love that JP Morgan may have gotten when customers investors pulled the deposits from the likes of Silicon Valley Bank into
What's your
the bigger
guesstimate
banks.
on that? That's really, really well said, Shonali. What's your guesstimate? Is Wells Fargo part of the love boat of big banks seeing gazillions come in?
It's hard to say, Tom, until we see the numbers. Listen, Wells Fargo has been a weaker bank than a lot of the other large banks we've seen in the United States. And remember, from Silicon Valley Bank, as well as First Republic, a lot of these are wealthier customers that tend to bank with the likes of a Morgan Stanley or a Goldman Sachs or a JP Morgan. So they may not have seen the same love, especially with this movement away from deposits more largely into money markets.
Shonali Bassick to help us with the banks here forward. Always helping us with the banks is Gerard Cassidy, head of U.S. Bank Equity Strategy and large cap bank analyst at RBC Capital Markets. Gerard, an open question. What is the first thing you will look at from Fortress Diamond this morning?
I think, Tom, the first thing we're going to look at is what's going on with net interest income and the net interest margin. We certainly will also be looking at deposits, as you were just discussing. But it's going to be difficult to figure out until we start to hear commentary from the bank because, as you know, as the biggest bank in the country, they are front and center with quantitative tightening, meaning deposits are coming out of the banking system, which QT was intended to do. So though they may have received benefits from the Silicon Valley depositors, which they did, that may be offset by QT taking deposits away from them and their peers. So net interest margin, net interest revenue, and then deposits, and then, of course, going to the capital markets businesses.
Jared, I just want to pick up on a bank like Wells Fargo. Tom was talking about that briefly. Let's build on that a little bit more. Wells Fargo essentially had its growth capped, and I wonder if having your growth capped is a good thing, given what we've seen develop over the last couple of years.
John, you make a good point, and that's one of the reasons Wells may have not have seen much in deposit inflows because their growth is capped, and it's capped really on the deposit side. They've done a very good job over the last 3 or 4 years in remixing their deposits to the consumer away from the wholesale. But as you pointed out, with their growth being capped, you would think that should we get into a credit cycle, they should benefit more maybe than some of its peers because of that cap on growth.
We're getting in just about 15 minutes here or less. We're going to be getting JP Morgan earnings as well as PNC Financial. Which are you more interested in, Gerard, given the focus on regional banks?
Lisa, you're absolutely right. I think the PNC number might be more important because it'll give us a read into other regional banks. Now, granted, they are a very large regional bank. And as you probably know, every Friday afternoon, we receive the deposit and loan data for the industry from the Federal Reserve. And the top 25 banks, PNC, of course, is part of that. The large banks actually saw an increase in deposits the week of the Silicon Valley failure or the week after. So I would say their deposit numbers are going to be very interesting, along with, again, the margin and as well as net interest revenue, because as you all know, last year, that was a tremendous driver of earnings for the industry. We expected it to slow down this year. It may be slowing a bit faster than we expected before the Silicon Valley issue.
Gerard, if you look at an economist's work, they're going to be focused on credit crunch. They're going to be focused on the potential implications for the economy over the next few months. Stock traders are going to say, can we start buying stocks again? Can we start buying the banks, considering how much they've sold off? What are you looking for to determine whether this is going to be a story of optimism around stocks that have already been significantly beaten up and devalued versus a broader economic slow malaise that's going to take months to carry out?
You put your thumb right on it, because when you take a look at the stock action since the Silicon Valley and Signature Bank failures, the banks have suffered dearly as a group. That deposit flight is over, in our opinion. So the factors for driving those stock prices down should really not be as much of an issue. But then we're pivoting to what you just talked about, which is the outlook for the economy. And that's where it becomes more questionable. We receive questions now every day about commercial real estate and the impact it could have on the banking system should we go into some real downturn. So I think the outlook from Jamie Dimon at JP Morgan, as well as the other banks, will be very important on the economic outlook, more so than on the deposit flight issue.
Jared, the Federal Reserve struggled to change its outlook over the last couple of weeks. Why will the C-suite at a bank like JP Morgan be any different?
I think they got a better pulse on the economy, especially JP Morgan. Obviously, the Federal Reserve receives enormous amounts of input from many different places, but JP Morgan, Citigroup, PNC, Wells, all the banks that are reporting today, they're on the front line. They see it every day in their customers' behavior, so they'll have, I think, a better feel for what's going on, and I think that will give us a real-time feel as well. And I think we're going to see that, yes, things are slowing down, but I think the stocks have over-discounted it, and there could be, we expect, these numbers today to be decent numbers, maybe even good numbers, and the stocks hopefully will rally on this news.
Gerard, thanks for being with us. I know you're going to stay close and break down some of these numbers when they drop. Gerard Cassidy there of RBC, lucky to have him with us. Just to go through the morning for you, this is what the lineup looks like. Live from the IMF, Lupin Rahman of PIMCO, Valdis Dombrovskis of the European Commission, Mohamed Al-Aaron of Bloomberg Opinion, and a good friend of this programme, of course, joining us around this table, together with Eric Nielsen of UniCredit a little bit later. That's the lineup from the IMF. The attention going into the market open firmly on the bank earnings. Through the next 60 minutes or so, we'll hear from JP Morgan, Citi, and Tom Wells Fargo.
It really rich and really different as well. I've got to admit, as I think Mr. Cassidy alluded to, I'm really focused on JP Morgan just because of the scope and scale. And I'd also note that they have a projection into Europe that I think gives them a knowledge base the other American banks really don't have.
And then financial institutions, Tom, some of which an audience outside of America might never have heard of before. You start to get a flavour, Lisa, for the regionals a little bit later on this morning.
The fact that Gerard Cassidy said that PNC will give us the real insight into the regional banks that really hold the question about the fate of lending in the commercial real estate market in some of these smaller consumer lending areas is incredibly important, and I believe that we're getting some of those PNC numbers
One of
right
my
now.
big questions is very simply, do they speed up what they sped up during the pandemic? Is it a new time of evolution for them?
First quarter revenue, PNC Financial, $5.6 billion. The estimate, $5.61 billion. Share buyback activity expected to be reduced in the second quarter. Going to build on some of those headlines in just a moment, and we'll get you the JP Morgan results when they come through. Live from Washington, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The U.S. is pressing the need for allies to coordinate against economic coercion, not just military threats. This as Japan prepares to host top diplomats from the Group of 7 nations amid heightened tensions with China. U.S. Ambassador to Tokyo, Rahm Emanuel, saying, quote, that coercion piece is important. China is set to be a key focus of discussions at that meeting. China's mega banks are planning at least 40 billion yuan of bond sales, kicking off a major funding push to comply with global capital rules by early 2025. Bloomberg has learned the Industrial and Commercial Bank of China and its 3 closest rivals are planning to tap domestic debt markets to sell a new category of total loss-absorbing capacity bonds as soon as June. Supreme Court Justice Clarence Thomas and relatives sold 3 Georgia properties that include Thomas's boyhood home to GOP megadonor Harlan Crow in 2014. That's according to a report. ProPublica says that Thomas didn't list the real estate sales on his financial disclosure form that year or report his extensive travel financed by Crow that occurred over 2 decades. Dozens of advocacy organizations and children's safety experts are calling on Meta to terminate its plans to allow minors into its new virtual reality world. Meta is planning to invite teenagers and young adults to join its metaverse app Horizon Worlds in the coming months. But some argue that young people could face harassment and privacy violations on the virtual reality app, which is only in its early stages. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
I think we're not over yet. How bad it gets, we will have to see. I think this problem is more systemic. We're sort of putting it on a few banks. Uninsured demand deposits went up by trillions of dollars during the pandemic, and they haven't come down. So the sources of fragility are there. There will be, problems going forward. The question is, as you pointed out earlier, how does this play out in terms of the credit crunch, which is coming?
The sources of fragility are there. Just a fantastic exchange with Raghu Rajan, the professor at the University of Chicago Booth School and former IMF chief economist. We had numbers from PNC just moments ago. Wells Fargo dropping right now, still waiting for JP Morgan. Shonali, it's your job to run through it for us all.
We're looking pretty clean for what could have been a messy quarter so far. Remember, Wells Fargo was trading below its book value, and you're having them this quarter now meet on estimates when you look at average loans. When you're looking at net interest income, they're above estimates. Efficiency is just in line, a little better than estimates. And mortgage banking is a little above estimates, actually. So looking a little clean here on Wells Fargo in a quarter where we've had real sell-offs among banks that were weighted towards the consumer. Similarly, at PNC, you're actually watching the deposits be better than estimates a little bit. So a lot of the pain that was expected is not as bad as was initially thought.
Shonali, what I noticed in the verbiage from PNC, and maybe we'll see it from others, is the dreaded word stable. Everybody's very stable. It's stable Friday here on bank earnings. Define what stable means to this set of banks.
Yeah, we are skating on ice in some ways, aren't we? Because we're looking at expectations of charge-offs to rise at a lot of these banks. We are looking at some real worries underneath the financial system. So stable here means, you saw it in the wording that John had used a little earlier, this idea of reduced buybacks. You're watching banks trying to get through any potential future storms. The deposit number is a big deal for PNC, but when we look also, the part that Gerard Cassidy was bringing up before is profitability now is becoming under pressure for a lot of these firms. While they're coming in line with estimates, have we reached peak net interest margins as we're watching more pressure on the lending books start to accrue? That is certainly the case for both of the banks that have reported so far, that they are lower, those net interest margins, than they were a quarter before.
Shonali, can you just help us sort of work through these results and what to sort of keep an eye out for? I'm looking at PNC shares up almost 4% in pre-market trading right now. What does it mean when we hear that these banks borrowed more from the Fed's emergency rescue efforts, as PNC did?
We know that has had a huge stigma for such a long time, Lisa, except when we're watching more of these banks start to tap the Fed for more liquidity here, it's not seen as bad as it may have been seen as in the past. And that is because we know that the banking system at large is trying to get through this storm together. And so we're seeing more banks borrowing from the Fed. But as we saw before, the data suggests that that's starting to cool down. And when you see numbers like this, the deposit flows being stable, as you say, Tom, that maybe some of that pressure is starting to ease for now. Remember, this is a Pittsburgh-based bank, so not facing some of the same California issues we've seen in that system.
Well, Shonali, you're the only one I know who read Jamie Dimon's letter cover to cover, so we'll look for you on the JP Morgan earnings here in a moment. Gerard Cassidy, of course, still with us with RBC Capital Markets. Gerard, the heart and soul of this is the distance between these five banks, these super regionals, and I guess 4,000 other banks. Where are we in 3 years? You're sitting with an institutional investor that's looking at combinations and transactions. Where's that 4,000 number in 3 years?
Tom, I think the simple answer is it's obviously lower. When you and I started out in the 80s, we had over 18,000 banks in this country, and we're now down to about 4,600. And so in 3 years, could we see, another 300 or 400 be acquired? Yes. The hard part today, though, Tom, is the marks. As you know, in purchase accounting, you have to mark the balance sheets to market. And because of the interest rate environment, the interest rate marks, I think, are an obstacle to get deals done. But once that calms down, I see M&A activity picking up in 24 and 25. So in your 3-year time period, it wouldn't surprise me if another 300 to 400 banks are consolidated away.
And John, JP Morgan Chase, I don't think can buy up some of those banks. I think they're precluded from that.
Get results from JP Morgan right now, up in a pre-market by 1.4%. Shonali, you've had 60 seconds to look at this. What stands out?
There are a few things. I know I'm not supposed to do this, John, but the fact that they beat so heavily on fixed income is significant for JP Morgan. Remember, the investment banks have been faring much, much better in trading than you've seen the rest of the banking system hold up. So I do want to hang on to that for a minute there. But I also want to take a look here, because when when you look at the deposit number over at JP Morgan, it is pretty much in line with expectations, but they are not seeing this massive jump or anything like that. Remember, we've been talking about this really secular decline that we've seen in regard to interest rates, the decline in deposit relative to the rise in interest rates and that movement to money market funds. So it's not like JP Morgan is raking in deposits. Remember, those deposit rates have been very low at JP Morgan as well. Lastly, I would say something interesting about JP Morgan is if you look at the total loan number, it is actually a little bit softer than it was the prior quarter. I think there are a lot of questions here because JP Morgan is going to set the tone here about risk appetite in the market and the propensity to lend. So that is a pretty fascinating number coming out from JP Morgan. It is not specific to how JP Morgan will fare necessarily in trading today, but it is bellwether for the economy to see what their loan book looks like. We'll be watching as more of their documents come out to see what their net interest income projections are for this year as well, given that concern that profitability from lending might be under pressure across the banking system.
Chanel, we've got to get to Gerard, but very quickly here, I think this is so important. What a revenue beat. I mean, PNC was with a single-digit, low single-digit revenue dynamic, I believe down a little bit. JP Morgan with a really substantial revenue beat. What does that signal to you?
Oh, the revenue beat. Sorry,
I thought you were talking to Gerard. But no, the revenue beat is interesting. Remember, and that's why I kind of pointed here to the fixed income trading beat that you're seeing over at JP Morgan, because they are making a little more money from businesses that we thought were going to be way more under pressure this quarter than they are showing. Remember, the markets are still volatile, and the buy side has had a significant amount of pressure coming into this year that they thought that they were going to be all clear, Tom. So it is significant here that you're seeing them beat on certain business lines, including investment banking, which has been weaker on the year. But again, a flock to quality comes for both the consumer as well as the corporate customer here. And you're seeing JP Morgan really be a beneficiary of that.
Gerard Cassidy with us as well with RBC Capital Markets. Gerard, what are they not saying this earnings cycle? These major banks, they have to spin the message. What do they not want to talk about? I would suggest it's just their scope and scale.
I think, Tom, that they want to make sure they don't scare the market by saying that they're taking in all these deposits from smaller banks. And as Shanali pointed out, the deposits, as we were chatting just a moment ago, there are inflows and outflows. And one of the biggest outflows for JP Morgan is QT, as we were just chatting about. And so I had to double check my numbers, Tom, because the revenue beat is amazing. It's not just in fee revenues. This company's net interest income quarter to quarter was real strong. And I think Wells, I looked at it quickly, Wells's revenues beat. You mentioned PNC was slightly below, but boy, so for where the stocks were trading last night at the close versus these numbers are much better than where the stocks were trading. So far in the three companies that have put them out this morning.
Gerard, just quickly here, what do you make of the increase in the loan loss provisions that we saw both at Wells Fargo and JP Morgan, seeing $1.1 billion set aside for that?
Yes, it's with the new accounting and that we all are familiar with, CECL accounting, current expected credit losses. You have to look through the cycle, and obviously as through the economic cycle, that is. And I would say with the economy looking weaker post Silicon Valley, I think this is evidence showing up in the provision for loan losses. We have to remember too, though, credit quality still is very strong for all these banks. There's no evidence of any collapse in credit, but they have to prepare now in anticipation of greater credit losses, which is likely in an economic slowdown or recession, which we are likely going to see later this year.
Hey, Gerard, great to catch up with you. JP Morgan agrees. Gerard Cassidy of RBC Capital Markets. JP Morgan increased probability of a moderate recession, and yet they see full-year net interest income at about 81 billion. Had seen it at about 73. So, makes sense of that one, Tom.
Oh, Cassidy nailed that. I'm sorry, this revenue beat to me is just extraordinary. That deserves a lot of study. That'll be front and center on the research conference call.
It's a beat from JP Morgan. The stock's up by 3.5% in the pre-market. Wells Fargo up about 0.5%. Citi building on the gains as well. From Washington, this is Bloomberg.
We have still an economy in the U.S. which is not landing, right? It's chugging along.
Central bank's ability to finally control inflation is much less direct than might have been thought or hoped.
Inflation has peaked, inflation is coming down, but that's not really the story.
Financial policy tools have worked well in being able to calm markets, but there are risks that are out there.
There are certainly possibilities that further stress could be triggered at some point.
This is Bloomberg Surveillance, live from the IMF spring meetings in Washington, D.C., with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Just a fantastic lineup of guests inside the corridors of the International Monetary Fund global headquarters in Washington, D.C., and outside of these corridors as well, from New York, looking at these markets. From Washington this morning, good morning, good morning. For our audience worldwide, this is Bloomberg Surveillance on TV and radio. Alongside Tom Keene and Lisa Abramowicz, I'm Jonathan Ferro. Equity futures on the S&P 500 still a little softer by 1/10%, but we've had numbers from PNC, stable, from JP Morgan, better than that, TK. That's a big beat from JP.
And even Wells Fargo as well is getting some love here. It's going to be a fascinating earnings season in all, led by the banks and, dare I say, led by tech as well, over the execution given the cards they've been dealt. And certainly the tone this morning is, particularly on the revenue beat that Gerard Cassidy talked about, this is a JP Morgan that's executing.
Stable is better than existential crisis, and that's what some of these banks faced over the last month. This move in the pre-market suggesting a lot of people are relieved as well. JP Morgan up by 4.5%, Wells up by 1.2%. We'll get numbers from Citi in a moment. That stock's up by 1.6%. But this is not a judgment on the future yet, Lisa. The coast is not clear. Jamie Dimon at JP Morgan saying financial conditions will likely tighten. I think that's an assessment a lot of people listening to this program will share.
There are two classes of people listening to these earnings. There are the economists looking for how deep the pain might go in the U.S. economy, and there are stock investors who are wondering when they can buy. If they were looking as to when they could buy and whether they could see some sort of increase in valuations, they are getting the signal, at least today. And if you look at PNC shares, they are up 5.4% in pre-market trading, so exceeding the pop you're seeing in JP Morgan on this sort of not all clear, but better than expected. That said, it doesn't mean there isn't going to be a real economic ramification from a reduction in lending.
From New York, joining us now is Bloomberg Wall Street correspondent Sonali Basak. Sonali, just go through the numbers for us piece by piece this morning.
For a second, because this beat is pretty incredible in a quarter that people were very worried about the economic outlook. But guess what, John? Their returns on tangible common equity of 23% are just remarkable, and that is with JP Morgan increasing headcount. So somehow they're keeping a handle on costs here, boosting headcount, as well as increasing their net interest income outlook for the year in a year where banks were not expected to get the same boost from interest rates as they were in prior quarters. Now, also, when you look at PNC, Lisa's point on stable is very important here because they're the first of the big regional banks to be reporting, and their deposit number is a little better even than what Wall Street had expected. So you're looking at relative stability here and them being really rewarded for some caution when they're going to be reducing their pace of buybacks coming into this quarter. And then you have Wells Fargo as well, also coming in just really in line with expectations, beating on some levels here. So this stability to come out from these banks at the start of this earnings season is welcome when you had Wells Fargo and Bank of America coming into today trading below book value. So can they regain some of that stock market value here, given that they have made it through the worst so far?
Hey, Sonali, stay close. One more bank still to come. Citi. JP Morgan right now up by more than 5%. You've heard from JP Morgan, we've heard from Wells Fargo, we've heard from PNC. Just a flavour of the regional banking story. Citi still to come a little bit later this morning. Should get that in the next 60 minutes or so. Sonali Basak there out of New York. Joining us now is Ken Leon, the Director of Equity Research at CFRA. Ken, you've had about 10, 20 minutes to go through some of these numbers. What stands out for you?
These banks are not only resilient, but they're making money. So what we did see, particularly in the consumer area, is strength in the private and the wealth management. Credit card was flat. Capital markets are strong, and I think maybe the conversation has been missing this, is that we're going to see these banks do better ahead. We hit the trough. So I would say the worries about the large banks is over. They're resilient, and even if and this is the first time too, deposits are down, but loans are up. That's really the first time that metric changed in maybe 6 quarters. Perhaps that's a good thing. And quietly, JP Morgan is offering you, John, a 5% one-year CD rate. So even if the deposits go out, they're quietly taking money from smaller banks.
Hey, Ken, you've been following this for decades. In the tone changes, you can go back and look from annual report letters from 15 years ago that are embarrassing and they're vogue. Is the vogue now for these banks to talk down their scope and scale? I look at the revenue pop in JP Morgan, and I would suggest his government affairs people are telling Mr. Diamond, shh, don't let anyone know. Are they almost too successful?
You're spot on. And the issue here is really the messaging, and that it's not that we have too much capital and we're restricted, because there's going to be regulatory costs and more regulation as relates to holding capital, especially exiting Basel III endgame. So the story here really is making sure investors are comfortable that they can get dividend growth and buybacks at levels commensurate with the last 2 or 3 years. And that's going to be really the debate they have behind closed doors with Michael Barr and the bank supervisories on the stress test, not this year, but next year. So that's the important thing for investors, is knowing that these banks are not only resilient and profitable, but they can get a total return on their investment.
Ken, I want to build on what Tom is saying, because he's absolutely right. We're talking about credit crises and the potential for some sort of fragility. And we're talking about JP Morgan expecting to bring in $81 billion of net interest income this year, which is far above what people were expecting. They are minting money. At what point are we expecting some of the discussion from the C-suite to be gloomier than perhaps it really is, to perhaps divert a little bit of attention from what's going on in the bottom line?
The bottom line speaks for itself, and that's what moves markets. Gerard was correct that we may have hit peak net interest margins, but looking back over the last 5 years of the large banks, only JP Morgan was able to grow net interest income from 2017, mostly because they expanded their loan activity and their book. But overall, the picture is good. And that was our point in the middle of March, is that obviously there was tremendous concerns about financial stability, but it was a great time as some of the large banks have sold off, and we took advantage. And I think the capital markets still can give you a strong punch in the second half of the year, because right now we're at the trough in terms of underwriting and also mergers and acquisitions.
You know, Ken Leon's dead on, and Lisa, I think this is so important. Max Abelson tearing this apart for Top Live right now. This is a surreal conversation, and Mr. Leon and Cassidy touch upon this. Their return on equity is 18%. They are minting money. Shh, don't let anyone know.
So how much is this a JP Morgan story, and how much is this a broader banking story? And Ken, that really will ultimately be the question through the rest of this year, as perhaps people parse the differential between the JP Morgans of the world and all of the, I don't want to say Silicon Valleys of the world, but perhaps the First Republic banks of the world.
There's 2 iterations here. The first one is, if you're diversified and you have large capital markets businesses, you're going to outperform. The second part of this is really related as you look at not only the super regionals, but smaller banks. They have a narrower total asset mix, a higher percentage of commercial real estate loans and commercial loans. And the consumer will probably slow down a bit in the second half of the year. We saw that in the JP Morgan results on credit card revenue.
Hey, Ken, this was wonderful. Wonderful to hear from you. Ken Leon there of CFRA. Citi coming up a little bit later. Ken's going to stick with us for that. He's going to stay close. Let's just stick on this price section.
Please.
JP Morgan's up more than 6%. Wells Fargo's up 2.4%. Citi's up by 3%. On the same day that JP Morgan and Jamie Dimon is telling you there is an increased probability of a moderate recession this year, they're raising their outlook for net interest income by about 8 billion.
On radio, you can round it up to up 7%. Do you understand? It's like a tugboat, single tugboat spinning an aircraft carrier in New York Harbor. Can you imagine the inertial force it takes to pop J.P. Morgan pre-market 7%?
Pretty incredible. Let's see if it sticks. Citi's up by about 2.8%. Citi, the next bank to deliver earnings. Lisa, there's a couple of ways of looking at this. One, OK, decent numbers, stocks up, but ultimately the coast is not clear. We need to wait to see how this regional stuff spills over into the broader economy. That's a process that may well have started. There's another way of looking at this, and some people might say the coast is clear, the labour market's still resilient, inflation's still sticky, the Federal Reserve needs to do more. Let's go 50.
So this has been the sort of problem with this moment, and the reason why it's been so deeply frustrating for everyone trying to create a narrative or talk about something new every single day is because you can basically say whatever you want and then have some data to back it up. And here you have the banks telling the same story. We are in this sort of, purgatory where we're not sure where we're heading. What is clear to me is that banks are clearly resilient, as you can see in this data. What's not clear to me is whether the consumers are. They are talking about the increase in loan losses, in loan delinquencies. It probably more so at a Wells Fargo, say, than a J.P. Morgan, with mortgages much more present. That is going to increase as we see it in growing number of the regional banks start to report.
Did you see the deposits from J.P. Morgan? It's basically its own country.
Yes.
2.38 trillion.
Oh.
The estimate 2.33.
John, that's a faux pas, as they say. You're not supposed to say the scope and scale of these things is truly transnational.
Just phenomenal.
The answer is you're correct. They are. This is one of the biggest problems, folks, with financial media. I won't mince words about it. We underplay the scope and scale of the mass of these banks. They're virtually Canadian-like in their dominance of the system.
Well, and it also raises this issue. Are they getting deposits from some of the regional banks, or was this organic growth? Because they did actually increase more than people expected. So that's, I think, something we're going to be... Well, I mean, just saying, theoretically, I think it's probably...
What do you think happened the week after SVB?
No clue.
1-800-JAMIE?
100%. Absolutely.
Let's move some money. Coming up in the next hour, Mohammed Al-Aaron of Bloomberg Opinion and Queen's College, Cambridge, around this table from the HQ of the International Monetary Fund. Equity futures just about turning positive on the S&P 500. The numbers from the banks so far pretty decent relative to some downbeat expectations. The banks rallying in the pre-market. Numbers from Citi in the next hour.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Chinese leader Xi Jinping met with Brazilian President Luiz Inácio Lula da Silva today in Beijing. The trip, which comes a little more than a month after Lula visited Joe Biden in the U.S., shows the importance given by the leftist leader to both countries. His visit to Huawei facility on Thursday sent a message that he won't pick sides in the U.S. fight against the Chinese tech giant. The French government says around 380,000 people took part in a 12th day of protests against President Emmanuel Macron's pension reform plans. Protester numbers from sectors including transport were lower than last week, with the Paris Metro and international train services like Eurostar operating almost normally. France's Constitutional Council will issue a ruling on the law this evening. A health analytics firm is warning there's a more than 1 in 4 chance a pandemic as deadly as COVID-19 could hit the world within the next decade. Airfinity says climate change, growth in international travel, and the threat posed by zoonotic diseases are all contributing to that risk. And a setback for Boeing just as it ramps up production of the model that's a major cash cow for the company. The U.S. manufacturer is pausing deliveries of some 737 MAX jets to address a production issue on the rear end of some aircraft. Shares fell as much as 5.3% after Boeing said it expects deliveries to decline in the near term as it inspects those affected jets. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
Our forecasts are significantly better than the IMF forecast. But what I should say is that last year we were the fastest growing economy in the G7. We are very confident about the UK's medium and longer term prospects.
What Jeremy Hunt would recognize is that we've actually had a substantial upgrade for UK for this year. It's just that we haven't gone as high as maybe some of the other forecasts are, but we've actually seen things turn out better than expected in the UK.
Just a tiny bit of tension between the International Monetary Fund and the rest of the world. That's one snapshot example of that, with Jeremy Hunt, the Chancellor of the Exchequer out of the UK, and Geeta Gopinath, the IMF First Deputy Managing Director here in Washington, D.C. From the nation's capital this morning, good morning to you all. Your equity market's shaping up as follows on the S&P 500, just about unchanged. We'll continue these conversations around the IMF as we wrap up our coverage, the IMF World Bank spring meetings today, and look ahead to a conversation with Mohamed Al-Erian a little bit later. Before we get there, we need to talk about the financials. JP Morgan setting the tone in a major way for the whole of the banking industry. JP Morgan in the pre-market up by more than 6%. There's a lift for Wells Fargo up by 2.65%. Citi's up by close to 3%. Behind us, numbers from Wells Fargo, JP Morgan, PNC as well, just a flavour of the regionals. So far, so good. OK, stable, Lisa. For JP Morgan, I'd go beyond the word stable, though. They raised their outlook. This wasn't just about a better first quarter. It was about a better outlook as well. At a time when I thought, I was sitting here and everyone was thinking the same thing. Isn't this the quarter where they tank the outlook because of what's happened in the last few weeks?
Are big banks eating the lunch of the small banks? That is going to be one of the key questions of this earnings season. Are we seeing JP Morgan with an increase to their net interest income because all of the regionals are losing their deposits and losing lending activity?
And this goes back to our conversation with Timothy Adams of the IIF, essentially the big bank representatives. He doesn't like me to say that, but I think that's accurate. They really don't want to talk about this. For our international audience particularly, I can't emphasize enough how sensitive this is in America. Going back to 1833, we are uniquely different in how we revere small banks. Can't say that enough.
Well, more banks still to come, Tom. Citi, a little bit later this morning. When that drops, we'll bring those numbers to you.
What time is it? I don't know. It
should be about 8 o'clock. Should be usually in about 40 minutes or so.
Yeah,
so we'll wait and see.
Really interesting to see. Right now with us, Anne-Marie Horton. She is our Chief Washington correspondent, of course, with Balance of Power, with Joe Matthew on the themes. I'm going to paint the picture, Anne-Marie, and let you pick it up because I know the terrain so well. You come out of Boston, and there's lots of fancy homes, and then it gets to be scrub pines on the way down to the cranberry capital in the world. And down there somewhere, and you can hear the screeching planes in the late night, is Otis Air Force Base. And it is part of the fabric of a relatively poor southeastern Massachusetts between their fancy resorts where Lisa goes for 6 weeks in the summer and the rest of Boston.
It's the longest introduction ever.
Tell us the shock.
Where are we going?
Tell us the shock.
Story are we talking
Tell
about?
us the shock of Otis Air Force Base in the last 24 hours.
You're talking about the 20-year-old leaker, Jack Teixeira, that will be arraigned today in Boston. And the questions are just now mounting on the Biden administration. This all started yesterday, remember, when the president said, we are very close to finding this individual, but he also downplayed how important this leak was, which potentially might bite the administration in the back because this seems like it is incredibly important. It is one of the biggest leaks we've seen in a decade since Edward Snowden. We spoke to Defense Secretary Mark Esper yesterday, and the big question that everyone in Washington is asking is how does this 21-year-old, for this job that feels very much almost like an IT job, the support of this base, have access to this kind of sensitive material?
So you and Joe Matthew on Balance of Power have done some wonderful coverage on this. I was watching it yesterday afternoon. I watched that interview with Esper. Anne-Marie, I think a point that the three of you made is that it's too early to draw conclusions. Is the president drawing conclusions, at least publicly?
I think what he's trying to do is just downplay the concerns, right? Politically, this is damaging. It's not the Biden administration's fault that this 21-year-old, per se, it's not their fault that this 21-year-old had access. This is an issue the U.S. has been grappling with. More people in the U.S. government have access to information since post-9/11 world. And the idea is you cast a much wider net, more intelligence to more people. Potentially you can catch more threats and more issues. But now the Pentagon has a real problem on their hands, and they need to figure out what went wrong here, because Pat Ryder, the Pentagon spokesperson, said that we do have issues in place. This was an individual it was a criminal matter that he took this information. But everyone is still asking, how did this person have this level of clearance?
Well, and then there's also the implications in real time. Is the major implication as you talk with people questions about things that were revealed about the Ukraine strategy in the Ukraine-Russian war, or is this something broader in terms of the alliances and the relationships the U.S. has with data sharing and just in general strategizing together?
I think there's 2 points. One, the president said that the reason why this leak is the issue is important, but the content not so much, because he said it's not contemporaneous, meaning this is not present-day information. But it is when you're showing information about the Russian military. Today, the Washington Post has another story based off these leaked documents about special forces within the Russian military and how they have actually been batted down. So that's one issue. Does this put Ukraine in a more vulnerable situation in the present day? The second is, obviously, what does this mean for allies? I think most allies have accepted. Remember a decade ago, Angela Merkel found out that the United States had access and was spying on her mobile phone. They have accepted that this is what the United States does. The issue is it puts leaders like the South Korean leader, who is about to come to the United States for a state visit, in a very difficult position. Now his opposition is saying the U.S. is infringing on our sovereignty. So in that respect, it's going to be much harder. But they're doing it, I would say, politely. But behind the scenes, people are furious.
Well, behind the scenes is really where I want to go, because here at the IMF, there seems to be a growing tension between the U.S. and Europe and the U.S. and Europe with respect to China. And that those fissures are growing. And I'm wondering, I mean, perhaps it's a bit of a stretch to tie this in there, but is there a feeling that the U.S. and Europe are not going to be reliable allies in the same kind of way going forward about things like China, about things like trade, and more generally as they sort of work in a collective group?
Well, one, trade. The president just left Northern Ireland with Rishi Sunak, and a trade deal was not discussed. He is coming here. Potentially that'll be on the table, but this is something the UK certainly wants. But when you're talking about these fissures between Europe and the United States, I don't think this is happening behind the scenes. Emmanuel Macron has just left China, and he basically said, we are not going to line up on the U.S. stance with this. We want to have our own strategic
autonomy.
Autonomy, that was the word, autonomy in the world.
He said this publicly. I had no idea that the president liked rugby so much. Did you? I'm not convinced he knows much about it, based on some of the comments he made, but apparently he loves rugby.
The president said he prefers his children, grandchildren to play rugby over football, I guess because he thinks American football, John's here, because he thinks it's safer. But actually, if you've seen a rugby match...
This is going down in flames.
If you've seen a rugby match, rugby is incredible. I would say violent and hostile.
So in rugby, you don't have the protection.
That's it.
And the helmet and all of that stuff. And because of that, there's always been this argument that they tackle each other differently. That because it's body to body.
I have not seen that with my own eyes.
In the NFL, you would do sort of helmet to helmet sometimes, which is kind of nuts.
Some people say that some of the protective gear that you wear in American football actually allows some of the contact that causes some of the concconcussions more so.
Which is what
that's one of the theories.
Did you ever think you'd be talking about this?
No, I never thought that I would. And
what I would suggest...
Full disclosure, I don't really like either. I'm a soccer fan.
Okay, good for you.
John, what I would suggest is Guy Johnson is watching this in London and going, what the hell are they talking about?
He's a big rugby guy.
As is everybody
And the
else.
president's a big fan of the New Zealand All Blacks, I'm told, as well. Anne-Marie, thank you. AMH with the latest. We should play that clip sometime.
All right, let's move forward.
Real expert. You know when someone tries to, like, you know, get along with the lads and then it just sort of, like, you know...
No offense to the president, but
Anyway,
even I know who the All Blacks are,
what was
which
he
says a
thinking?
lot.
What was he thinking? I don't know. We'll skip this.
It was
Let's
a
get
record
back to the
scratch.
banks. Let's get back to the banks. Let's talk about JP Morgan. JP Morgan with a big beat this morning, setting the tone for the financials, and I would say kicking off earnings season, Q1 earnings season in a major way. JP Morgan absolutely flying in the pre-market by 5 to 6%. It was more than that at one point. It's not just the beat. It's not just the nature of the beat. It's a beat and a race, Tom, for the outlook.
Yeah, it is. It's leadership here for the major banks, and weeks from now we'll start to hear from the small banks when they get a much different story.
Lupin Rahman of PIMCO joining us from the International Monetary Fund. Our coverage from the World Bank IMF spring meetings continue from Washington, D.C. this morning. Good morning. This is Bloomberg. Equity futures just a little softer here Looking over to New York, and the market opened about 2 hours away. The data yesterday gave this market a lift in a big way. PPI softer than expected, claims a little higher than expected, breathing life into that soft landing theme. I say breathing life. Every day you get together and you get a shifting probability around a range of outcomes. I'm not saying it's the base case. I'm just saying that the probability shifted in its favour just a little bit, and that's what was behind the lift in the equity market. Outside of futures this morning, with the Nasdaq down 0.5%. This is the bond market. 2s, 10s and 30s look a little something like this. And let's sit on the 2-year. The range on a 2-year has been massive. Every single week for weeks. Last week in the 360s, north of 4%. This week, relatively speaking, a bit of calm. A 15 basis point range, something like that. We traded in the 380s a little bit. We traded above 4% a little bit. We're still around 4%, 398.74. 2 basis points higher on the session. Remember, retail sales coming up a little bit later, and we barely talked about that. That drops in about 60 minutes' time.
We have retail sales today?
Retail sales
I did not know that.
That's the bond market. Here's foreign exchange. Euro against the dollar. Euro dollar. The high of the year. The print came a little bit early this morning. Intraday, the high, 110.76. Right now, 110.52. We're positive just a little bit on euro dollar, but the theme over the last several weeks is clear. Euro stronger, dollar weaker. Tom, we have to talk about the bank earnings because that's setting the tone for the price action.
It's setting the tone, setting the tone.
Bramo, do you want to pick up on JP Morgan?
Sure.
Absolutely flying.
JP Morgan flying up at one point about 6.5%. That's faded just a touch, but not much. 5.8% gains on JP Morgan. Wells Fargo and Citi trailing that. Citi is set to report earnings here in about a half an hour. Those shares up about 3%. Wells Fargo 2.3%. If you take a look, though, under the hood, what's interesting to me really is PNC came out. They delivered better than expected results, and those shares are up more than 3%. Are we seeing truly an all clear for the banks, or are we seeing JP Morgan minting money on the heels of everyone flooding into the biggest banks, while some of these smaller regional banks see incredible outflows and incredible pressure that strains the lending? And are we going to see that divergence continue as people go into the big banks and continually shun regionals?
I think it's more complex than that, and basically what it does is scope and scale in a hugely diversified portfolio. Some of what you say, I think, is definitely true. There can be some trends there of the big get bigger, the small struggle, and we'll see in the coming weeks. But on this conference call, they're going to do everything they can to not talk about how they're winning all their victories across many different platforms.
You don't think they want to scream and shout about their deposits?
What's their use of cash? Excuse me, Mr. Diamond, can you raise a dividend? We can't raise a dividend in this crisis right now, that kind of thing.
We said it, 1-800-JAMIE, as things got bad.
Yeah.
And it looks like that's what happened. And I think Bloomberg Intelligence coming into this release questioned whether this was a port in the storm, and it looks like it was.
And here at the IMF headquarters, John, I mean, let's be honest, it's a Dow Jones Industrial Average free zone. There's a sign that says that. Guess what? SPX, rounded up, 4,200. That's a surprise of 2023.
That's the top of the range. The top of the range so far, from 38 to 42, Tom.
We're going to migrate forward here out of bank earnings, John. What, Citigroup in 30 minutes, something like that, 15 minutes? This is always a joy. Joining us now, Lupin Rahman with PIMCO, head of EM, of course, her service to the International Monetary Fund for years, and far more importantly, a student of the ramifications of the central banker to the world, Jerome Powell, and EM sovereign debt. How big of an influence is Mr. Powell right now on Bolivia, on Ghana in the news today, and frankly on other larger, more successful EM economies?
Well, the Fed cycle is extremely important for major emerging markets, particularly those in the investment grade portion of the asset class. But you correctly point out that for the frontier markets that are really facing credit stresses, relatively, you know, the impact of the Fed is relatively a lot smaller than you would expect.
It's smaller than you'd expect, but the fact is there's a multidimensional crisis in EM now. In your study of history at LSE of EM, how is this distress, this tension different than what we've seen back to 1992 and frankly back before that?
Well, I take a slightly different view. I actually think the crisis is more in developed markets than emerging markets for the first time in a long time. In EM, you have inflation coming down, you have growth, essentially.
And you mentioned Korea got out front with rate increases.
Absolutely. Korea, Brazil, Chile, the list is endless. And not only that, they've avoided deep recessions, whereas we have the the kind of soft landing versus hard landing debate in developed markets. I think that, you know, when we're thinking about crises in EM, it really is a select number of frontier markets that don't form the aggregate part of emerging markets that we actually invest in. And it's important to bear that in mind. For countries like Mexico, like Brazil, like South Africa, like Indonesia, we're extremely constructive. This new phase within their economies, particularly as they're trying to come out of this tightening cycle, is going to be very constructive for EM investors.
Lupin, you said this is one of the most exciting IMF meetings you've ever been at. Why?
Well, this is the first time we really have a lot of discussions on debt restructurings and, importantly, the role of the multi-development banks and China in debt restructurings. And so this time around, you know, we're seeing a lot of debate and discussion, some pushback from China. It's the first time we're really seeing negotiations related to the MDB's senior status in debt restructurings. And the recent global workshop that the IMF held last week essentially highlighted that the MDBs will be committing more grant financing for some of these debt restructuring countries.
How much is what you were first talking about connected to this very deeply? That right now the crisis is not in the developing world as much when it comes to the rates picture. It's much more in the developed world, in frankly, U.S., which is the biggest market for a lot of these debt instruments. How much is that coloring the conversation and the willingness to sort of allow things to sort of just go on and losses to gather at a time that's somewhat fraught for the developed world?
So I think that, you know, the impact that high inflation in the developed economies has on these discussions is important, but it really isn't the front and center when it comes to the debt negotiations. The debt restructuring issues are long-term. It really strikes at the heart of how the Paris Club, China, India, the GCC, Saudi Arabia are going to work together in future debt restructuring. So these are longer-term issues that I think all parties recognize the importance of really putting front and center.
Are you impressed with how the IMF has handled some of these discussions?
Yes, I think the IMF has played its part in terms of being the negotiator between all of these actors. There are elements that, you know, the IMF needs to focus on in terms of its lending into arrears and lending assurances criteria. It's really important for countries like Sri Lanka, like Ghana, who went through balance of payments crises but need financing from the IMF immediately and in a very short period of time for the IMF to really iron out some of these creases when it comes to their lending into arrears and assurances practices.
On a market desk with your 3 Bloomberg terminals in front of you, Lupin, what do you want from China to signal from China that they will do Western restructuring? What's the next step? The FT, Robin Wigglesworth, has done a great job on this. Our Enda Curran, I think, has been strong on this as well. There has to be a China process of restructuring. What's it look like?
So we're getting a lot more clarity on what China's key issues are in these debt restructuring. And essentially the first is the seniority of the multilateral development banks. And to some extent, the recent announcement on grants has overcome that. The second is domestic debt restructuring. And this is a very valid concern from the Chinese. Many countries that are coming for debt restructurings have very high levels of domestic debt, which need to be addressed. But essentially, governments find it extremely difficult to impose haircuts on their population and as well look after the stability of their banking sector. This is an issue that needs to have a lot more work behind it to really get a handle on it.
We don't have the time for this. We can go on for 3 hours. Can you do a panel with me today? What are you doing at 11:30 this morning? The heart of it to me, as Ruchir Sharma mentioned the other day, is the rescue culture. Is the rescue culture where everybody has to be pain-free? Is it seeped over to your world of sovereign debt workout? Do we want everybody to be painless in working towards haircuts or extended duration?
I think that the EM world is no stranger to haircuts and actually very painful restructurings. We've got a long history of very low recoveries in some countries and very high recoveries in others. I think that, you know, where we're going to is a shift from the focus on private bondholders to the official sector in terms of how the official sector should behave and coordinate themselves in resolving debt restructuring. So really, with the collective action clauses reforms that we saw over the last decade and a half, the private sector really is doing its part. And the issues are much more in the official and the official bilateral sector.
Always been the case. The official sector doesn't like taking losses, Tom. You know that. Look at what happened in Europe with the debt crisis there. Repeatedly, same thing.
Is the tension with China going to impinge best practices on a new 21st century IMF?
And this has been a big concern. Also, what are the rules of the road? I mean, can China say, all right, we didn't get paid back, so we're going to take your port? You know what I mean? And, or we're going to take your shipping line.
The jargon
for this, seriously, this is one of the big issues.
The jargon for this is they go, well, we're into meetings on technicalities. I don't know what IMF technicalities are. Lupin's expert at that.
Technicalities.
We're just hearing about that for years.
Fascinating stuff.
It is fascinating. I actually, like, some of these meetings are really fraught, and everyone talks about it. It's like, oh, yeah, we're coming to an agreement, and then you talk to them behind the scenes, and they're like, oh, it's a nightmare.
Yeah, they make it, publicly, they make it a bit of a snooze.
Yeah,
I have
exactly.
to admit, for me, it's
100%.
been, it's been pretty sleepy, but you know
Behind
the
the
tension
scenes.
behind the scenes, big time.
Significant.
Lupin, this was great. Thank you.
Thank you so
Lupin
much.
Raman there of PIMCO on the latest from the International Monetary Fund and the World Bank spring meetings. Our focus, of course, will stay on that. We'll catch up with Valdis Dombrovskis of the European Commission in just a moment. We're looking forward to that conversation. We're also going to recap the bank earnings for you. JP Morgan out of the gate a little bit early this morning. If you are just tuning in, welcome to the programme. Out of the gate with a beat for Q1. A beat for Q1 and a raise for the rest of the year. JP Morgan, Tom, up by close to 6% of the pre-market. Citigroup reporting earnings in about 20 minutes from now.
And the ratio analysis is extraordinary. I'll go back to what I mentioned earlier, 18% return on equity. Those are the kind of numbers where you go, well, we'd like to talk about use of cash, but we won't this time around.
A snapshot of the financial system. The big banks are looking good relative to expectations. Lisa, it's about the regionals. It always was. Need to get a flavour of that.
How much is what we saw with deposit increases and an upgrade in terms of net interest income? The big banks eating the lunch of the small.
The big banks positive in the pre-market. Equity futures down about 0.1% on the S&P 500 from Washington. This is Bloomberg.
Keeping you up to date with the news from around the world with the first word, I'm Lisa Mateo. The U.S. government is struggling to explain how a 21-year-old man in a junior post was in a position to allegedly leak a massive trove of classified U.S. documents related to the Ukraine conflict. Jack Teixeira, a cyber specialist for the U.S. Air Force National Guard, was arrested in Massachusetts and is scheduled to be arraigned in U.S. District Court in Boston today. The New York Times reports he was the leader of a gaming chat group where the documents first appeared. In a testy public exchange with her Chinese counterpart today, Germany's foreign minister said Taiwan's destabilization would be a, quote, horror scenario, and any change in Taiwan's status would be unacceptable. Beijing has ramped up military drills around Taiwan in recent months. Meanwhile, China warned about the risk of falling debris near Taiwan this weekend following a planned satellite launch, denying Taipei's claims that a no-fly zone will be imposed to the north of the island. OPEC Plus production cuts are likely to drive up oil prices and inflict more pain on consumers already squeezed by inflation. That's according to the International Energy Agency. It says global oil markets will tighten more than previously expected, forcing hefty inventory withdrawals of about 2 million barrels a day on average in the second half of the year. Hermès quarterly sales jumped as the maker of Kelly bags continued to see strong demand from Chinese customers. The luxury label says first quarter revenue was up 23% at constant exchange rates. Analysts had expected a gain of 16%. Those shares rose as much as 2% in Paris at the opening of trading. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
I've not really seen evidence at this stage suggesting a contraction in credit.
We have seen a couple of data releases that have shown a certain amount of tightening in credit underwriting standards, as well as in the overall level of credit.
You're being kind, because I think she said she saw no evidence of lending contracting, and you've said we do.
Yeah, absolutely. There is certainly evidence in the data of some contraction in lending and some tightening of lending standard.
Treasury Secretary Janet Yellen contradicted by Tobias Adrian, the IMF Director of Monetary and Capital Markets. And that's been a theme, a feature of these World Bank IMF meetings this week. The IMF with a gloomy outlook and the pushback coming from elsewhere, whether it be Chancellor Hunt to Bloomberg a little bit earlier this week, speaking to Maria Tadeo, or Tom, from Secretary Yellen herself, suggesting that things aren't that bad, the economy is still doing well. And the evidence that we all see of contracting credit based on the data we saw on Friday, Tom, she's not going to acknowledge it.
It's always there, but it's more accentuated this time. That's what I would say. And I'm trying to, there's multiple whys to that. We don't have time to go into it. But the political tensions here are different than any other meeting I've been to.
I'll pick one why, politics. And perhaps we can leave it at that and pick up on it.
Well, it's politics, but it is the geopolitical, the set of geopolitical tensions that are out there.
Tom, we're about 10 minutes or so away from Citigroup earnings. I just want to touch base with a price action really briefly. Sure. Equity's still negative on the S&P 500 by about 0.1%. But if we can check out the big banks just briefly, if you are just tuning in again, welcome. You missed it. JP Morgan up 6% in the pre-market. It's a beat on the first quarter. It's a raise for the outlook as well. The guidance pretty decent at a difficult time, we thought, for the financials. A not so difficult time, Tom, for the major players.
It's going to be interesting to see, to say the least. What we're going to do here is move to the banking earnings, but right now stay on a very delicate discussion. This is a bilat. That's what they call it down there. We're going to have a bilateral right now. That's where two parties that really don't want to talk to each other. We're going to do that with Valdis Dombrovskis, European Commission Executive Vice President, the former Prime Minister of his Latvia. The bilats you go into now across the Atlantic Ocean with select American officials, is the tension normal back to your prime ministership with Latvia in the heart of the GFC? Or is there something new this time about transatlantic bilat tension?
Good morning. Well, first of all, I would highlight that there is a very strong transatlantic cooperation. We are strategic allies, and especially in times like this, where we are confronted by Russia's aggression against Ukraine, by war on European soil, we need to work together with US and with the entire democratic world. So, and I would say that this cooperation, both in terms of supporting Ukraine, putting sanctions against Russia, is very strong and very good. On trade side, obviously, we are also having very extensive agenda. This was subject of some of my meetings also yesterday, and there we are still working, for example, on some of the discriminatory aspects of the US Inflation Reduction Act. But once again, we are constructively engaged with US authorities and hope to the extent possible solve those issues.
From Latvia up to Estonia, over to Finland, and your world and all of our worlds have changed here with Finland joining NATO. To me, it was just a lifetime shock to see that. How do the political dialogues you're in every day change given the shock of this war of Finland simply moving from its independence and joining Europe?
I think as regards Finland, it obviously was a logical choice. If you live next to the aggressive empire, you need to seek stronger protection. And that's what Finland did with joining NATO, and hopefully Sweden will be able to join soon as well. And it definitely strengthens the security in entire Baltic Sea region.
Commissioner, you're always diplomatic. I would suggest that you've had to spend the week putting out fires. Fires started by someone else. I would like to understand how the Europeans would respond if the US administration turned around and said that they don't want to get caught up in crises that aren't ours. What would you say back to that?
Well, as I was saying at the beginning of interview, when we are confronted with major challenges, we are better off if we work together as EU-US, that we strengthen our transatlantic alliance.
Have you told the French president that?
Clearly the position of the EU is very clear on this. As I said, we, EU and US are strategic allies, and we, especially in current confrontational geopolitical situation, we need to work together.
I get the feeling, and this is my assessment, and you can correct me by all means, that you're all underplaying the tension between the European Union and the US right now, publicly. Whenever I speak to someone from the US administration or the European Union, I get the same story. We all need to work together. What I actually see as an observer is a race for subsidies in the United States, the European Union racing to get its act together to do the same thing. It's a real tension starting to emerge. How are you going to resolve that? How do you actually truly work together when the US is spending a lot of time saying, let's build in America, make America, and then buy America? How are you going to resolve that?
Well, on this, and if we are to discuss specifically U.S. Inflation Reduction Act, EU has been very clear since the very beginning. So we definitely welcome the climate ambition of the Inflation Reduction Act, and the U.S. is also working on these goals. But at the same time, we have serious concerns about discriminatory aspects in Inflation Reduction Act. We have set up the dedicated EU-US task force to work on those issues, and indeed we are raising with these issues also bilaterally with US administration and trying to solve them.
The previous administration was heavily criticised for its approach to trade. Everybody would come on TV publicly, they had no problem saying it and criticising the Trump administration. Is there any difference, any daylight whatsoever between this administration and the last one on trade? Can you identify one specific piece of daylight difference between what this administration is doing and what the last one did?
Well, first of all, with this administration, we were able to park several long-standing disputes, like Airbus-Boeing dispute, like dispute related to steel and aluminium tariffs. Right now, we are working on the global steel and aluminium
What's the status
arrangement.
of that, Commissioner?
Well, just yesterday, I was discussing this with U.S. Trade Representative, Ambassador Tai, and there is a very intensive, very constructive engagement, and we are working with a deadline of October this year in mind.
We talk a lot about the relationship between the U.S. and Europe, both when it comes to trade, but also when it comes to military. We've been talking about these leaks that are very sensitive from the national security of the United States. Does that change your relationship at all with sharing information or doing business with the U.S.?
Well, once again, I must emphasize that in a situation where we see aggressive policy of Russia, I would say increased ambitions of authoritarian regimes, it's important that the democratic world works together. So yes, there are problems, there are difficulties, but we need to be able to discuss, overcome them, and find joint solutions as a response to current geopolitical situation.
Varis, you're very kind to give us so much of your time. Thank you for being with us, Commissioner. We appreciate it. Varis Dombrovskis there of the European Commission. Tom, on some really delicate issues right now between the United States and Europe.
Here's there, and you talk about surprises of these meetings, and each meeting is different. And this has been, as I think Lupin Rahman said, an extraordinarily rich meeting. I'm surprised by the lack of discussion of year 2 of this war. The commissioner brought it up. He's one of the few to really address year 2 is different than year 1 of any given conflict.
We mentioned that in the last hour, Tom. The European economy is so different to what we expected 9 months ago.
Yeah.
This, in many ways, is the best case situation, and Lisa talked about why there's been a great effort to basically shift away from Russian energy, not out of choice, but out of necessity, and helped out also by the weather. Now, we've mentioned a few times this was one winter. Can we get through the second, the third, the fourth?
The third, the fourth, yeah.
If things are less favourable, but certainly so far so good. And that's largely been captured by the foreign exchange market as well. The fact we're back at 110, the ECB is able to talk about 50 basis point interest rate hikes with the frequency that it has done speaks to an economy in better shape than I would say anyone anticipated 9 months ago.
I would go, as I mentioned, to the grandeur of the moment, the absolute lifetime shock of Finland being in NATO.
Yeah.
These are symbols that adjust the dialogue, every dialogue, I should say.
In the next hour, I'm looking forward to this conversation. Mohammed El-Arian dropping by the studio here at the International Monetary Fund Global Headquarters in Washington, D.C. That conversation up next. Don't miss that. Equity futures on the S&P just about unchanged. JP Morgan rallying in the pre-market. Numbers from Citi up next.